In the last video, we went through, and you now know whether or not you passed the first level test for whether you qualify for Chapter 7. Now, if you qualify for Chapter 7, that also means that you qualify for what I call preferred Chapter 13. If you are late on your house payment or late on your car payments, and you're going to file a Chapter 13, then since you qualify for Chapter 7, you also and necessarily qualify for preferred Chapter 13. Well, what does that mean? What that means is that you have the choice of either having a 36 or 60-month repayment period to make up your delinquent amounts. You owe X amount of dollars delinquency on your house. You can spread that out over a 36 or a 60-month period. Likewise on your car payments, if you're late on your car payments. You're not going to have to pay any statutory minimum amount to your unsecured creditors. That is a real benefit. So qualifying for Chapter 7 has a tremendous amount of relevance for you filing Chapter 13 as well. Now, let's assume that you've went through this exercise and your income, your family income, you and your spouse, that it's above this amount. That still doesn't mean that you can't file Chapter 7. What it means is that we're going to have to go to the second part of the test and look at your actual monthly expenses. Now, if you've noticed so far, we haven't even looked at any of your actual expenses. So the second part of the test does that. What we're coming up with, if you'll notice down here at the bottom of the screen, income minus expenses equals disposable income. That's what we're going to do for the second part of the test. Before I pass on from qualifying for Chapter 7, let me familiarize you with a couple of forms that you're going to be looking at. If you're filing Chapter 7, the income part of your bankruptcy petition is called Form B-22A, and it's 8 pages in length. If you have met this test that we just went through, you and I are going to complete the first 3 pages of B-22A. The rest of B-22A in your bankruptcy is going to be completely blank. The only thing that you'll do is you'll sign it on page 8. So it really simplifies you filing bankruptcy from the income qualification standpoint if you meet this first test. Now, in Form B-22C, that is what we'll use if you're filing Chapter 13. And in like manner, your form will only complete the first couple of pages of B-22C, and the rest will be blank. So for both Chapter 7 and 13, you passing this preliminary test simplifies the income qualification test. Now, let's again assume that you earn more than what we show here on the table. What are we going to do? Well, let's go to the next page and let me explain some concepts to you. Basically, before I do, let me touch on this again. Income minus expenses equals disposable income. Here's the game plan. We're going to take your income that we used so far, and then we're going to say, okay, after we subtract this person or this household's expenses, how much money is left at the end of each month? And that number that we come up with is called disposable income. You and I might say discretionary income. That would have been a much more appropriate term for the bankruptcy statute to talk about, but they don't. So disposable, when you look at it, just think that's the money I could, in theory, have available every month to pay my unsecured creditors. I'm going to pay all my expenses out of the income, and what's left I could pay my unsecured creditors. So here's the theory of the bankruptcy statute. If when we get done, if we subtract your expenses from that income number that we came up with, if we have less than $100 a month available to pay your unsecured creditors, then you qualify for Chapter 7. If you earn more, have more than $166 left over each month, then you have to pay a certain amount to your unsecured creditors during the Chapter 13 plan. If you fall in between, if your disposable income is somewhere between $100 and $165 a month, then we look for whether or not that amount, let's say that you had $100 a month available under this formula, disposable income. That if we take that over a 60-month period, would that pay 25% or more of your unsecured debt? If it would, then you'll have to do a Chapter 13 and pay a certain amount to your unsecured creditors. If it won't pay 25% of your unsecured debt, then you don't have to pay any minimum amount, and you still qualify for Chapter 13. So that's what we're looking at, and that's the importance of coming up with these expenses. Now, what expenses are they going to recognize in the bankruptcy court? That's this next page. We're going to start on it, and we'll continue on with this even into the next video. The first part we're going to look at is that category. We've got federal and state taxes, Social Security, required retirement. That first bracket of expenses, almost all of those are going to come from your paycheck information. So we'll add all those up that you paid during that 6-month period, the same 6-month period, and we'll again divide by 6. So let's take the first, federal and state taxes. We're going to look at your wage statements or your employer summary that he provided you. We're going to add up all the federal and state taxes that you paid during that period and divide by 6. Likewise, Social Security and Medicare tax that you paid out of your wages. Add them all up, divide by 6. Health insurance that you pay. Now, we've got health insurance that's being taken out of your wages. You may have a private health insurance plan that you pay also. Add that up as part of that total, and then divide that by 6. Other required from wages. You know, a lot of employers will take out $5 per check for processing your paycheck, or maybe there's some other deduction that they take out from every one of your paychecks. Add all those up that you paid or had deducted during the 6-month period, and then divide by 6. Now, the last one, repay retirement loan. Let's say you borrowed money from your pension plan, and they're taking out so much per paycheck for you to pay that back. You can only include this amount in the formula as one of your expenses if your employer requires that you repay that amount. If it's up to you as to whether or not you're going to repay the amount, then you can't deduct it. So write those numbers down for every one of these categories that came out of your wages, and then I'll pick up on this expense category discussion in the next video.